A very warm good afternoon to everyone who has joined in and the people who are still joining in. So, I welcome all of you to today's session, which is on EPR ETP 360 degree. And we are going to cover everything from onboarding to settlement and all the things that are related in the EPR ETP. Now, EPR ETP has become the talk of the town because of how it is going to change the entire EPR process and how it is going to change the process or the way we used to trade credits and used to do our EPR obligations and everything. So this makes this topic very important for us to discuss as of now because it is directly impacting all the stakeholders, all the obligated entities that are registered on the EPR portals. EPR portal for plastic packaging, battery, e-waste, used oil, waste tire, all of them. So this is why this session is a timely session for all of the people because there is quite a lot of ambiguity around EPR ETP. And through this session, we are going to help you understand how EPR ETP is going to work, what are the things that you need to prepare for, and how your teams need to be prepared, or what are the things that you need to start doing so that you can comply with all the EPR ETP norms. Now, we all know that over the past few months, there has been significant uncertainty and anticipation around the EPR Electronic Trading Platform. The portals, all of the portals which were supposed to go live on 1st April, all of those portals are frozen as of now. And the ETP is not yet live. And in addition to that, there is no confirmed deadline. And at the same time, regulations, court proceedings, and system architectures are still in a very evolving stage. But despite all these uncertainties, one thing is very clear that the way EPR credits are traded in India and on the EPR ETP, that is about to change fundamentally. And that's exactly why we are here today. So, this entire webinar is designed to help you understand not just what the ETP is, but how it will actually function operationally and what your organization or your different teams they need to be prepared for. ReCirculytics was founded in August 2025, and ReCirculytics it builds on years of domain expertise, and it focus on delivering EPR consulting and technology practice for India's evolving regulatory landscape. Now, we provide end-to-end compliance support, not only for plastic packaging, battery, e-waste, tire, and used oil, but also the upcoming EPR compliances as well. For example, your EPR ELV, your construction and demolition waste, and non-ferrous metal scrap also. So, the basic mission of ReCirculytics is to bridge policy, practice, and technology through a data-driven solution. And this strengthens governance, circularity performance, and long-term sustainability outcomes. So, the founder of ReCirculytics, Mr. Sujain Jain, he is a first attempt chartered accountant and an early pioneer in India's EPR compliance ecosystem. Now, he, having supervised 400 plus annual return filings himself, he brings a very deep expertise in regulatory reporting, credit management, and digital compliance workflows. And prior to ReCirculytics, he has already worked with Fortune 500 companies and global packaging leaders, designing practical compliance and circularity strategies. And he continues to contribute as an EPR expert and industry speaker. And also, he's going to be the speaker for today's session. Now, coming to the services that ReCirculytics is offering all the people is compliance, consultancy, credits, and technology. The agenda that we have that we are targeting today. So we are going to cover the regulatory journey and the current status, wherein we discuss the timeline from the environmental compensation notices to the 1st April freeze, wherein the EPR ETP was going to go live, but it froze. We all of us we saw the ticker on all the different EPR portals, wherein CPCB has just mentioned that it is going to get back to us shortly, but we do not have any defined timeline on that. And there is a court case that is there in Delhi High Court, and how that case and what are the current developments in that case and what are the implications. Then the new paradigm, how the ETP changes everything, bilateral versus exchange model, cost implications across all the regimes. Buy side deep dive. On the buyer side, what are you supposed to do? Like you have to understand about the van accounts, fund blocking, order types, price time priority, credit expiry risk. And on the seller side, we will discuss certificate life cycles, settlement processes, invoicing, T+2 payouts, TCS and TDS. And then we will also discuss something on pricing matrix, cost impact, and towards the end, we will have a live Q&A session. So if we start this EPR ETP journey, so in 2022-25, there were environmental compensation regimes issued under all the EPR regime. When it came to 2023 and onwards, the EPR ETP has been introduced across PWM, BWM, e-waste, and tire waste through amendments to the respective EPR rules. Other EPR regimes, including used oil and ELV, have incorporated the ETP since the inception. Now, when it comes to 31st December 2024, there were guidelines on the authorization of EPR ETP operator and functioning of EPR ETP, based on which we hosted our webinar of the 19th December 2025. And in September 2025, MSTC was awarded the contract for development and operation of an ETP for EPR certificates by the Central Pollution Control Board. Now, in 2026, 31st January, there was a video that was uploaded on the YouTube by MSTC official, which provided the link for the proposed EPR ETP and its overview. And the website made open for feedback by stakeholders by raising a ticket on the portal. Somewhere in February to March 2026, there was industry consultation that was going on. So the ETP was demonstrated to industry stakeholders, and question of industry stakeholders were addressed. And the functional process of ETP was published, and it was announced verbally that ETP will be only authorized platform for exchange or trading of EPR certificate from 1st April 2026. Now, when 1st April came in, the transfers actually closed on all the EPR portals and some cosmetic changes observed on some portals. Now, there has been no update from CPCB on how or when this system will go live. So with this, I would like to invite Sujan to start the session. Over to you, Sujan.
Thank you, Arushi. Good afternoon, everyone. Thank you for joining in today. I see a lot number of participants who have joined today. So yes, we have understood, how the EPR ETP has come into picture. What was the backstory? Now there is one regulatory hurdle which we foresee, which is also delaying the whole implementation of the EPR ETP. So what had happened is in 2024, when the rules were amended to incorporate the EPR ETP within, to give a legal framework for the EPR ETP, there was also a clause which mandated that the transactions which will happen on the EPR ETP, they should be within the price range of 30 to 100% of the environmental compensation cost, which is given. Now, what happened is in November 2024, multiple companies and multiple stakeholders, they filed a writ petition. Writ petition is basically a appeal or a case in the court of law, that is in the Delhi High Court. They filed a writ petition. uh, the grounds of that writ petition, what we could understand from the publicly available order, is that the rule which fixes this price of 30% to 100% has been claimed to be arbitrary, unreasonable, and ultra vires to the Environment Protection Act. So arbitrary and unreasonable, they are self-explanatory, but ultra vire means that something or an action which is beyond the legal authority. So, in summary, what these stakeholders have claimed in front of the Honorable High Court, Delhi High Court, is that the CPCB has no good reason, for implementing these price cap. That is, it is too arbitrary. It is way too heavy-handed. That it is unreasonable, and they were never given the power in the first place to set the prices. So this is what they have appealed or prayed in the petition which they have filed in the Delhi High Court. Now, moving ahead to December 2025, on the e-waste portal, there was a declaration which the users or the buyers and the sellers, that is the producer and the recycler, were requested to agree to while transferring of credits. That said that both the recycler and buyer and the producer have transacted within the price band which is given in the environmental compensation guidelines and which is as per the rules. Now, what happened is another stakeholder, they went to the Honorable High Court and they appealed that while this matter is currently, in front of Delhi High Court, this thing has been done by the Central Pollution Control Board. So the Delhi High Court gave a stay for the requirement of acceptance of this declaration till the next date of hearing. So the effect was that CPCB cannot insist taking this declaration while the buyers and the sellers are doing the transaction. Now, as of the current status, the industries who had filed the writ petition have completed their arguments. The government, their argument is still pending. The special bench or the judges who were, hearing this case, that special bench has not been assembled on various instances. That is, in January there was a date, in February there was a date, and very recently on 17th April there was a date for this for hearing of this case, but the bench did not assemble. Hence, there was the next date of hearing is 3rd June. So now what happens is, let's say if the exchange, or this is again, this is our assumption and our legal understanding, that if the exchange is activated with the floor and the cap price, then it will violate the order which has been, the stay which has been given by the Delhi High Court. And if the exchange is activated without the floor and the cap price, in that case it will violate the rule, because the rules clearly mandate that any transaction which is to be happening on the EPR ETP should be within this range. So this is a legal or a regulatory hurdle, which I am sure there must be discussions going on, and we have seen in the industry demonstrations which they had done, that in February they were of the opinion that there would be no floor and cap price, but in March again they changed the stance, saying that there would be a floor and cap price. But currently there is no clarity on how this will happen exactly. So this is the link for the ETP portal, that is etp.cpcb.gov.in. This is the EPR ETP portal. When the first step, you see multiple things which are there on the portal, which is about the ETP participants, markets, rules, and all of those things. And then there is a button through which you can enter the ETP. That is through proceed to the EPR SSO. For entering or getting the access of the EPR ETP, it is only available through the common EPR portal and not through any other portal. So let's say if you don't have an account on the common EPR portal, you will not be allowed to access the EPR ETP at any cost. So what happens is, even when you enter your credentials on the common EPR portal, if you have not linked any of your accounts on that EPR portal, you will not be able to see the EPR trading platform. Currently, none of the users are able to see that. The screenshot which we have used here is from the demo which the CPCB had, which is uploaded on the ETV website. So what essentially the reason, or what essentially the common EPR portal does is, any person who is not obligated to register or is not registered on the portal, that person will not be allowed to access the EPR ETP. So let's say the consultants, the waste management agencies who were supporting you with the EPR ETP, with the fulfillment of EPR credits. Now, after the implementation of the EPR ETP, only those people who are registered on the EPR portal and have linked their accounts on the EPR SSO will be granted access to the EPR ETP. Other than that, let's say if I create my account without account in my company's name, without linking any of the EPR account, I will not get the access to the EPR ETP portal. So once you link your account with the EPR ETP portal, what the ETP does is it interacts with the common EPR portal. It understands what kinds of accounts you have linked with the common EPR portal. So let's say you have linked your recycler account, you have linked your producer account, you have linked your brand owner account. So it will understand what accounts have been linked, and accordingly it will give you agreements and terms of conditions which you have to accept. So let's say if your profile only has a producer account or a brand owner account, in that case, what you need to accept is the terms and conditions of the EPR ETP exchange and the participation agreement for the buyer. But let's say you have only recycler account which is there, which is linked with the account. In that case, it would be terms and conditions and the platform participation agreement. And if you have both the accounts, like you are a buyer as well as a seller, in that case, you will have to accept all the three agreements before getting onboarded on the EPR ETP. So once you have accepted all the agreements, you will reach or you will land on the page of KYC and bank verification. So here on the left hand side, you will see all the details which are particularly of your company. So for example, the name of the company, the authorized signatory, and what type of profiles you have. So you have a buyer profile or a seller profile. And let's say if the ETP identifies you as a buyer, then it will automatically allocate you a virtual account number or WAN, as they have abbreviated in their functional process document. So you will be allocated a virtual account number. This virtual account number or this virtual account will be managed by SBI, and that account would be used for adding of funds on your EPR ETP. So the buyer will have to transfer money first to that virtual account number. And once that money is credited to the virtual account number, it is only then that they can start the transaction on the portal. So there is no restriction. So for example, you have 10 accounts from which you can transfer the money to a virtual account number, but to access the funds you on the EPR ETP, you only have one account. So I can transfer from my Delhi account or my Mumbai account, and I can transfer funds to the WAN account, and then the WAN account funds would be used to buy the credits or do the transactions. And the second step is that the buyers and the sellers both will have to submit a bank account number and the IFSC code of the bank account number which they want to link with the EPR portal. Now, with the purpose of asking this bank account number, first for the sellers, whatever credits which they are selling, all the payout will come in this bank account number. And for the buyers, if there is any refund which they want to take, so let's say today morning I deposited 10 lakh rupees into the virtual account number, and I have done the transaction of only 9,50,000 rupees. So the 50,000 rupees which has to be refunded will be refunded only to this particular account number which has been verified by the stakeholder or the entity. Once you provide the details on this page, the exchange will run a 1 rupee penny drop confirmation to verify whether the account is actually of the company whose common EPR portal account is there. So it will run a 80% name match case. So it will match the name which is reflecting in your bank account and the name with which you have registered on the common EPR portal. If they are matched by a ratio of 80%, then it will be approved. And once your account is verified, that is when all the three tabs which are there, they will turn green, and you will be finally given access to the main EPR ETP or the dashboard of the EPR ETP. Okay, so once you go on the dashboard, once you complete all of these procedures, you will be taken to the dashboard of the EPR ETP. So first thing is the profile selection. So on the dashboard, whatever accounts which have been linked with the common EPR portal. So let's say your plastic, your used oil, your producer account of e-waste, and your recycler account of battery and plastic waste, all of these accounts would be displayed here. So for recyclers or sellers, each registered unit which is in operation or which is linked will appear as a separate profile. So let's say I have three recycler accounts or three recycling plants across India which have been linked to the same common EPR portal. In that case, there would be three entries here. And currently it appears, so let's say if all of these three accounts, they have on a consolidated basis 500 metric tons of credits which are to be sold. Uh, Currently it looks like then they will have to put three orders separately because three profiles are separate. Same way for the buyer, they have to select the profile for which they are buying the credits. So it could be plastic brand owner, it could be plastic importer, and the profile which you have selected to buy the credits will be transferred to that particular account only. So you have to take care while in plastic, there can be scenarios of a company having multiple accounts. In that case, the plastic portal currently permits inter uh, intercompany transfers for the companies which have the same PAN number. But how it will happen after EPR ETV is still a question mark. Second thing, a lot of questions were asked during the industry stakeholders about this toggle of the off market and continuous trading. So this is basically, if you read the disclaimer which is there below, it says that this is only for production, and when the ETP is live, you don't have to, or this you will not be there. So this toggle basically helps you understand how the dashboard will look once it is in a continuous trading or a live market or in a off market. What would be the difference? And thirdly, a color scheme which the ATP is following or the MSTC has used is blue for buyers and green for sellers. So there is no confusion for the stakeholders who are accessing the dashboard or the EPR ETP. So these are some options which are available to the users on the dashboard. First is the navigation tab, which we will cover in a very deep manner. Then there is an option to change the units, which we have already understood. Then there is a profile menu also, wherein there would be notifications, my account details, KYC, and if you want to change the bank account, that option will also be there. And there is a help and a support, just like a ticket portal, which is there. Then there is a Bhashini menu which will help users to view or interact with the portal in their regional languages. And then there is a quick reference guide which is there on the dashboard on the portal. So now we'll understand what the journey will be there for the buyer. So on the buyer navigation tab, there are six tabs which are available to a buyer. First is the dashboard, which we have seen. It will give a overview or a bird's eye view of the current trading positions or the current trades which they have done, the price chart, order status, funds availability, basically a bird's eye view. Second is fund management. So there you will see how the fund is moving within the ETP or the trading account, and what are the settlements which have happened, how much is the balance, and all of those things. If you want to add more funds, you can do it from there. If you want to remove the funds, you can do it from there. Third tab would be the trading tab, wherein the buyers will actually participate or click on buy buttons. That would be through the trading tab. Fourth would be the buyer ledger, wherein what were the funds added, and it will give a normal ledger account details, like how much was the fund which is added, how much is currently blocked, how much is utilized, and how much was refunded. So now the dashboard is a bird's eye view, and all of the other tabs, they give a deep inside view of the activities which a buyer can perform. And then there is an invoice and document tab. So whatever order matching and settlement which have been done, the buyers will be allowed to download invoices which are raised by the seller and the operator on this portal. And lastly, there is a MIS and a reporting tab. So understand this like an analytical dashboard which you will have, wherein you will see the summary of what trades you have conducted, what was the average price, what is the total quantity which you have buy. So this is the option which you have for the dashboard. Now let's come and understand how a buyer will place an order to buy the credits through the EPR ETB. So first step is that they have to add funds in their virtual account which has been allocated to them. The transaction methods can be multiple: NEFT, RTGS, IMPS, UPI, all of these. You need to take care of one thing, that when you so while the transfer can be real time in case of RTGS, IMPS, or UPI, but in NEFT, as we are all aware that it gets processed in a batch wise manner. So let's say if you see a opportunity that the credit is being traded at a price which is favorable to you, and if you do an NEFT or transfer to the virtual account number, then there might be a case that the transfer might take 1 hour or 2 hours according to the batch wise processing, and you might miss the opportunity. So be very particular of selecting the transaction mode. Then once you have deposited the money in the virtual account, this is the flow which the fund will follow. So first step is to deposit the account or the balance. Second is the funds will be blocked. So let's say you have placed any order. So against that order, the system will block the requirement for required funds. So that amount would be basically the quantity to be purchased into the price, into the GST plus the transaction fees and the GST on the transaction fees. So that amount will be blocked. So that blocked fund cannot be refunded unless the order is cancelled before execution, or if the order is at the end of its validity. Once the fund is blocked and the orders are matched, so let's say there is a trade which has been matched. So in that case, what will happen is that now this fund would be remain blocked and it will go to the settlement. Now at this stage, you cannot refund or request for the refund if the order is matched. Last is settlement. In the settlement, the fund will move from the van to the seller's account. And last is, if you have any fund which is unblocked, unmatched, that same can be refunded to the KYC or the bank to the bank account which you have verified at the initial stage. Only one request can be made per day. So we ideally put the orders or the request of the refund at the end of the day when you are sure that you don't have to execute any orders for the day. So once you have added the funds to your account, now you have to go to the trading tab and select the particular commodity or the credit which you want to buy. So in the example, you see the example of battery and lithium credit within the battery EPR. So you have to go to place the order. There you have to input three things. One is the quantity which you want to buy. Second is the order type, and third is the maximum price which you are willing to pay to buy that particular credit. So in order type, the buyer will have three options. One is a market order, that whatever price which is running in the market or whatever the last traded price was there, execute my order at that price. So here you will have no control, or you will not be given even the option to input the price. Whatever price which is running on the exchange, it will be the price at which your settlement will happen, and your funds will be blocked. Second is the limit order. So in the limit order, what will happen is that you will have to specify the quantity which is to be bought and the price which you are willing to pay. This would be the maximum price. And accordingly, a order will be placed. And if there are any orders or if there are any sellers which are willing to match your price, in that case, your order will be executed. And let's say you place an order of 5 rupees, and at the end of the day or during the whole day no seller was willing to pay except 5 rupees. In that case, at the end of the trading day, the order will be cancelled. Then there is a third option which is called good till trigger. And it is also again a limit order only, wherein the buyers and the buyers will have to put the quantity and the price which they are willing to pay. But here they can select the validity. So they can so let's say you have planned that I have to buy the credit at rupees 5 only. It's okay if it is not done today. I will put my funds in my account, or it will be blocked for a week or so. But if during the whole period or during the whole week, if I want to buy it at 5 rupees, or if the price reaches 5 rupees, only then the order should be triggered. So in that case, the order you should select GTT. So the only difference between the limit order and the GTT is that the limit order will, with the validity of the limit order would be only till the end of the trading day, and for GTT it would be till the time or the validity period which you have given. So before placing any order, the system will calculate the exact funds which are to be blocked. So as mentioned earlier, it will calculate the calculation is very simple: quantity into price plus the GST component plus the transaction charge plus the GST and transaction charge, and that amount would be blocked. So currently, as per the verbal communication which was given in the last stakeholder meeting, was that the minimum and the maximum price or the cap and the floor price will be applicable. So so currently you cannot put an order which is at a price which is lower than 30%, which was the last um, communication which they have given. But obviously we understand that there could be some changes in that communication, or how the price at which the orders can be placed. So currently it is 30 to 100% as per the rules. So let's say if you have the balance or the funds which are insufficient, in that case you cannot place the order and you will be getting an error that is insufficient balance available to block the funds for this order. So your order placement will fail in case your balance is insufficient. So once you have clicked on save order, or you have filled the details which are acceptable to you, you will be first prompted to enter the OTP. Without the OTP, no buyer or seller can place an order, modify an order, or even cancel the order. So the OTP step is very necessary and it's reasonable also. The reason being there would be no unauthorized access to the ETP or the order placement because obviously the fund is involved. But here there is one small catch of which mobile number the OTP will go to. So there are two mobile numbers which can be there in the scenario. So let's say I am putting an order for plastic brand owner account. So in the brand owner account, let's say it's my personal number which I was linked at the time of registration, and then there is one company number through which my common EPR portal account was created. So in that case, there is no clarity in the functional process document on whether which number the OTP will go to. But for order execution, buy side, sell side, confirmation, cancel, modification, anything you need an OTP before placing the order or before doing any transaction on the portal. So you can also cancel the order. So only the unmatched portion. So let's say I have placed an order for 500 metric tons and currently 50 metric tons, the matching has been done. That means a seller has been found for that order. So in that case, I cannot cancel that 50 metric ton, but the remaining 450 metric tons, I can either cancel that order if I want to, or I can even modify the order. So this screen which you're seeing is for cancelling of order, and the next screen which you'll see is for the modification of order, wherein you can modify the order price, the quantity, the order type, and all of those things. So just like the how we transact on Zerodha or any of those trading apps, in the same way the process is there here also. But we have an OTP option or the OTP which will come every time we have to do any transaction. Next slide, please. Okay, now that you have entered the OTP and your order is placed, what will happen is that your order will enter a live order book. So for this is simply a simple word for this is order depth. So like right now also in Zerodha and other platforms, you see that there is a order depth and all of those things. In the same way, there will be a order depth which will be available here also. So it is basically a order book which is there wherein the matching of the orders will be done. So this basic tab can help you understand what are the current trends. So what the sellers are willing to, what price the sellers are willing to sell, and what is the maximum price which the buyers are willing to buy. How much are the order? What is the quantity? Everything you'll see in the order depth. So this should be a starting step or a step wherein you determine what price should I bid or what price should I decide to bid on. Now, there are three terms which were used in the functional process document. So, first term is price priority. So, the first priority for order matching will be given to the best price. So, the best price has two meanings. For seller, it is the highest price which can be fetched for the sellers, and for the buyers, it would be the lowest price at which they can buy. And the prime priority means that whenever there are two orders which are placed at the same price, the order which is placed earlier will get matched first compared to the second order. And the third term, that is execution price, is always the price of the resting order. That means that whatever, so let's say when I put a market order, so when I put a market order, the price at which the market order will be executed would be the price, the best price which the seller are willing to accept. So let's say in this current scenario, I put a market order. In that case, what will happen is my purchase will happen at this price, that is 41.11 rupees per credit or per whatever the metric ton or kg or the term is. So that is the meaning of this particular line, that the execution price will always be the price of the resting order. So all of these orders which are mentioned here, these are called in financial terms a resting order. Now, one notable thing which the buyers have to take care, or once you have placed the orders and the credits have been credited to your account, is that you're in this whole process you have no control over the expiry of the credit. So nowhere in for the buyer journey there is a term for expiry. So there could be a scenario that a credit which is going to get expired tomorrow or day after can get credited to your EPR wallet. So the buyers need to take care of that thing before once the credits are executed or traded or received in their wallet. I am sure CPCB must also be aware of the possibility of this scenario, and they might be working for a solution for this particular thing. But if not, please ensure the credits which are getting transferred to your wallet. Now, I understand these price, time, and resting order and all of those things, they can look a little confusing. So, what we have done is we have made a small example. So, let's suppose at 11 a.m., this is what the order book looks like. So, bid side, that is the buy side, there are people who are willing to buy a particular credit at 148. The demand is 20 metric tons. 147.5, the demand is 35 metric tons, and at 147, it is 50 metric tons. And the sell side, it is the sellers, the best price which the sellers are expecting is 150 rupees, followed by 151, 152. So, in the current scenario, no trades will be matched because you see the difference between the buyers and the sellers' expectation is not matching because the buyer will not be willing to pay more than 148 and the seller will not accept anything less than 150. But let's say now there is a new buyer who places a market order of 15 metric ton. So in that case, what will happen is the trade will get executed immediately at 150 rupees per kg. That is the resting sell orders price. And all the 15 metric ton will be removed from the ask side. Now, let's suppose there is a seller who places a limit order for 147 or 30 metric tons. So, in that case, what will happen is firstly, the price of the first buyer, that is a 148, it will get executed at 147. Then the balance quantity will go to the person who is buying at, who was ready to buy at 147.5. So, his order will also get executed at 147.5, and the remaining 10% would be fully matched. So the seller will firstly get a better price. So here, I guess the execution will be at 147. You can just ignore zero point 0.5. So since the seller is willing to accept orders at 147, the best price of 147.5 will be purchased from the first lot, and then the 147.5 order would be purchased at 147. So the sell or the execution price would be 147, and the best prices which the people are ready to pay. So, for example, the buyer one, that is who was willing to buy at 148, will get the allocation of 20 metric tons at 147. And the second buyer who was willing to pay 147, his order will also get executed at 147, but the quantity which will be allocated to him will only be 10 tons because this particular seller was only ready to sell 30 metric tons of his quantity. So this is how the whole transaction will get executed or will be taken, and the price will be 147 and not 147.5. So moving on, once all of this activity has happened during the day, at the end of the day there would be the settlement process which will kick in. So the settlement process is the first time when the buyer and the seller will meet each other. So what will happen at the end of the day, the exchange will collate all of these trades which are fully matched, and it will send settlement instructions to the relevant EPR portals with the certificate IDs, buyer, seller, organization, trade date, reference, and all of those things. The EPR portal through APIs will conduct these transfers from the seller to the buyer's portal. The EPR portal will respond to the exchange with a acknowledgement or the success notification that the credits were successfully transferred. The seller will raise the GST invoice for the buyer using the proforma invoices which will be available to the seller. Don't worry, I will cover all of this in the seller journey. Then the seller uploads that signed PDF invoices into the exchange system. Once the seller uploads the invoices, the payout will be released to him within T plus 2 business days after the settlement, but it will only be when the invoice is uploaded. If the invoice is not uploaded by the seller, a daily reminder will be sent to the seller. The buyer can, download the seller's invoice via the login, and both buyers and sellers can take or download the invoices issued by the MSTC, that is for the 2% of the transaction value, also from this particular page. So this is how the buyer will be able to see on the portal that this was the settlement, the order number, who is the seller, the invoice number of the seller, the invoice amount, the invoice, and again the MSCC transaction fee invoice and the current status. So this is the journey for the buyers. Now we'll understand how the sellers will place the order. So again, they will have dashboard, they will have certificate management. So certificate management would be something wherein the certificates which are there in the EPR wallet of the seller, which they want to make available. So let's say I have 100 certificates, and out of those, I only have to sell now 50 certificates. So from this page, they will select which certificates they want to sell. Then there is the trading tab wherein they will place the orders for the certificate which they want to sell. Then there is a settlement management wherein seller will see the trades which are executed, and they will be able to see the pro forma invoices being generated of how the invoice they have to generate. Then there is the seller ledger which will give the account of the funds which are uh, paid out to the recycler. So the recycler will not have to give request for refunds, so their funds will directly reflect in their bank account number, in their bank accounts. Then again, there is a tab of invoice and documents, and again, lastly, there is a MIS reporting tab. So again, the whole analytical dashboard of the quantity sold and its value and all of those stuff will be there. So here, when we start the seller side trading, the first step is to select the credits which they want to sell. So there are 5 categories of credits which have been given. So once the seller certificate management tab is opened, the system will retrieve all the certificates which are available in the in the seller's EPR wallet, and that whole certificate will be given. The account will be given here. So total certificates, out of which how many are active or basically free, how many are on hold, in trade, traded, and settled. So active will be the certificates which are available in the wallet and are neither on hold or in trade or settled or anything. On hold is something that the certificates which are blocked by the recycler or the seller for sale on the EPR ETP portal. So once they block it here, they cannot transfer it from the EPR ETP portal. Ideally, they have restricted offline transactions. So it's basically just the mechanism of the seller notifying that this is the particular credit which I want to sell. Then there is in trade credit. So let's say we are sitting at 11 o'clock and the price matching is done already. So uh, when the price matching is done, then the certificate would be in trade. And once the final order is matched, then it would be traded, locked for pending settlement. And finally, when the credit is transferred to the buyer, it will be settled. That is, full settlement is completed. So the sellers will have to click on the particular certificate type. So let's say here we have taken the example of lithium. So when the seller clicks on the lithium tab, they will get this screen wherein all the certificate types or the certificate quantities, denomination, validity, and all of those things will be visible to the seller. And here, if you see, the seller has multiple filter options. So they can filter the validity of the certificates which they want to sell. So let's say I have 10 certificates in my wallet, out of which I want to sell only the certificates which are valid for this week. So I can do that. So I will select and I will change the status of those certificates. So if you see here, there are certificate on hold, active certificate, and all of those things. Then here is the option which they have: expiring in week, expiring in current FY, expiring after current FY. So all of the options are there for the sellers to filter for the credits which they want to make available. Then once they have made the credits or they have selected on hold. So let's say here they have selected this particular credit which is on hold. That means now they can go and place the order to sell this particular certificate or credit on the portal. So again, here you will have the same column, the quantity which they want to sell, the price at which they want to sell, and the order type which is there. But here there is one particular difference, which is the certificate selection. So here the buyers will have an option to select the particular certificate which they want to sell. So here if you see, they have an option of selecting auto select the certificates earliest expiring whole certificate. So the the credit which is expiring earlier will be automatically selected for valid for doing the transaction. And second is, if the seller wants to manually choose the certificates which they want to attach to this order, they can do that too. So let's say if a particular recycler selects manual selection, in that case they will be given an option to select which certificate they want to sell. Here they can see the certificate ID, the denomination, and the expiry of the certificate. Once they have done that, the buyer will also see the tentative amount which they will receive if the trade is executed at their given order price or the given limit. So from this particular amount which they will be receiving, first is obviously the trade value, that is the price at which they are willing to sell their credits into the quantity, the GST amount on that, then the 2% fees in case of recycler would be deducted. So that is obviously a recovery which the MSTC will have to do from the price which they have derived. So that would be deducted, and there would be GST on the fees which is there. Now there are two more components, that is TCS and TDS. So while TCS and TDS in one transaction is very vague, but here it is because the TCS which is being deducted, it is being deducted under the GST Act. So here the MSTC, the regulator or the operator of the portal, they are acting as an e-commerce operator, and any e-commerce operator, let's say it is Amazon, Flipkart, Meesho, or MSTC or IEX, they have to act as an e-commerce operator and they have to collect TCS, and this TCS will be available in the seller's GST credit ledger. So at the time of filing their GST return, this amount will be available in their wallet and they can utilize it. But at the time of order placing, this amount would be deducted from the particular order value or the settlement value. And second is 1% TDS. This TDS is deducted under the Income Tax Act. Now there is some ambiguity on how the TDS will be applicable and how all of these things is there. But currently, you just understand that there is 0.1% TDS which is to be which will be levied on the transaction. So again, the for order confirmation, they will have to enter the OTP. Same way for they can also modify the order or cancel the selected order. So here the screen is little different because here there is the credit ID or order ID which is linked to a particular order. So the seller will have option to edit only one particular certificate, or if he wants to edit multiple certificates. Again, then there would be order execution. There is no change. The same methodology or the same example is there. Now, when the seller will have this sort of screen, so when their orders are matched at the price, at the end of the day, they will get the details of which what are the settlement IDs, what was the trade, what was the certificate number, what was the value, and here you see there is invoice details. This invoice detail is basically a pro forma invoice which is prepared by the operator itself, which will help the sellers to make the invoice in their ERP or ERP. So this is a different screen for the seller. So for the buyer, it will directly reflect the invoices, but here it will reflect the details of the pro forma invoice. So when you click on the invoice details, you will see the whole pro forma invoice wherein the total quantity, rate, unit value, GST, invoice amount, HSN code, buyer's details, seller's details, all of these things are available. Now, once the seller has made the invoice, they have to give the invoice number on the exchange. So they have to select this upload invoice, give the invoice number, invoice date, invoice amount, and upload the signed PDF copy. Once they have done that, it is only after the invoice is uploaded on the exchange or the platform, the payout or the timeline for payout will be initiated. So it is not on the date on which the trade is executed, but it is on the date on which the invoice is uploaded. So once you have uploaded the invoice, and then you will see the timeline also. The settlement is completed, invoice was uploaded, system processing is pending T2, T+2 from the settlement or invoice uploaded. So these sort of visibility is available for the seller so that they can manage their cash flow accordingly. Now there is one particular issue which which is concerning, is that when the performer invoice is generated, the HSN codes which are there in the demo site, they are of the scrap which has been sold. So, for example, in the two for the two demo invoices, the performer invoices which they have given, the HSN code in the first one is of waste of primary cell batteries, and second one is cobalt scrap. So currently, as per the industry practice, what the industries have been doing since the past 3 years is that they have been treating the purchase of EPR credits as a service. And usually it is collection of waste, whether it is hazardous or non-hazardous. But here on the demo site, it is still a question mark because the invoices are scrap. And second thing is what or how the classification is done for the certificates. So currently, the whole TDS regime and everything which you see, according to that, it seems that the exchange or the operator is looking at the certificates as goods and not as services. Because if it would have been services, the TDS would have been 1% or 2%. Uh, One particular parallel, which we have a reference which we have taken for doing the whole analysis on the EPR ATP was India Energy Exchange, because there also something like certificates or credits are being sold by the industry to other industry. So if you see there on the IEX, the classification which they take for renewable energy certificates or energy saving certificates is HSN code of 4907. That is basically a certificate. So it is not of electricity, but of the certificate. So 4907 is unused postage revenue stamps of current or new issuing country, which have been or which will be recognized as a face value stamp, impressed paper, banknotes, checks, stocks, shares, bonds, and other similar documents. So that is the classification which IEX has been using. And one more concerning point for the buyer is that while on the seller side, if you see the TDS amount is deducted from the calculation, but at the buyer time or at the settlement or the formula which is there for the amount to be debited from the buyer's ledger, it is quantity into price. And there is no option or no provision for subtracting the TDS which the buyer company has to deduct. So for that, again, we tried to understand how does this happen in the India Energy Exchange or IEX. So in IEX, there, so see these TDS provisions are very complicated. So it may differ for one transaction and it may differ for another transaction. So let's say 1,000 crore turnover company is buying the credits. For them, the TDS provisions might be slightly different. And for a 10 crore revenue company, the transaction or the TDS compliance might be a little different. So the income tax department had acknowledged that there are certain difficulties in the exchange transaction, and accordingly, what they had done was they had exempted obviously the stock market or the BSE NSE transactions, and also the transactions which were there for which were conducted on REC, the transaction in electricity, REC, and energy saving certificates. So they had removed or given exemption or relief that this will not be applicable under the TDS. So there might be a scenario that even CPCB might have to or will have to reach out to the finance ministry, or it would be finance ministry or the CBDT to get this sort of uh, exemption or relief for operations on the EPR ETP also. Okay, so now we have completed, the whole journey of how the buyers and the sellers would transact on the EPR portal. Now let's understand in a very brief way what is going to change. Firstly, the price discovery. So before the EPR ETP had come into place, the price discovery was negotiated privately. The prices were usually lower than the prescribed floor rates. Now, in the new model, it will be exchange determined within the range of floor and cap price. And obviously, there is this decision which has to come from Delhi High Court. And I am sure the MRCC and CPCB, they will come up with the clarity on how the prices will be determined. Second is the counterparty. So earlier we knew or we had predetermined that this is a particular waste management agency or a recycler from whom we are going to buy the credits. But when the ETP comes into picture, you will have no idea of the credits from whom you are buying. So it will be anonymous, and the only time that you will come to know who the seller is after the matching has happened at the end of the day. So another compliance, if for the buyers and the sellers, they will have to create multiple vendor codes and customer codes to satisfy the systems or the existing system which they have in place, because here you will have no idea of who is the counterparty who is going to raise the invoices. Again, there is no provision for the waste management agency or any consultant. They have been left out of the scheme, so the transactions will happen directly between the buyer, that is the producer. Producer means everyone, the producer, importer, brand owner, all of those classifications, and the seller, that is the recycler or the refurbisher. Disposal of pre-consumer waste. So previously what was happening is a lot of producers, whatever pre-consumer or the scrap which was being generated at their site and which was disposed to a registered recyclers, they were taking credits from such recyclers for free of cost. But now, under when the EPR ETP is formally operational, and now there are no operational offline transactions which will be there on the portal. So all the transactions which will be there on the portal would be through the ETP. So now you cannot get those credits at free of cost. Payment terms, they used to vary previously. So sometimes they were advanced, sometimes they were within 7, 15, 13, 45 days. But now the buyer will have to pay upfront even before the determination of the price. So, so buyers will have to, take care of the fund management. They will have to strategize how they have to place the transactions on the portal and what would be the conditions. And they will have to take approval from the finance before doing and all of those things. So the activity will increase. Then transaction fees. So previously there was no transaction fees, but now both the buyers and the sellers will have to pay 2% transaction fees, which will be reimbursed to the MSTC, and a part of it will go to the Central Pollution Control Board. Compliance proof, some of the producers previously used to conduct due diligence of the recyclers, collect the fulfillment document, collection for the collection of waste and all of those things. Though the final proof of compliance for the portal was always credits, but now the producers will have no option to do it. So now they cannot collect the proof of compliance because they will not know who the seller is, and there will be no distinction between two recyclers. So recycler A and recycler B both can demand the same price on the exchange. If the order is matched, then their orders will get executed. Last is geography-based compliance. So earlier, the producers were fulfilling the compliance by doing geographical allocation because of pressure from various state pollution control board and pollution control committees. But now, since the counterparty is anonymous, the credits can or could be procured from any states. That is, the credits would be geo neutral. So you will have no control over what the bought or who the buyer or the seller.
Thank you so much, Sujan. So, with that, I will just try to, consolidate a little bit whatever Sujan has, said or discussed during the entire session as, major key takeaways. So, the first being that it is not just a, platform change, but there is a lot of change that is happening to the basic structure of the EPR. So we are moving from a bilateral relationship driven system to a fully exchange driven mechanism, which is going to be a lot of there will be a lot of anonymity that will be there. And it is going to be entirely driven through this exchange platform and not any relationship or contract form. Second being that there will be operational readiness that will define the success of the companies, because there are concepts like van accounts, fund blocking, and real time execution. With all of these preparedness on systems and processes, that becomes very critical for all the companies, all the teams that are involved to look after the EPR compliances. And the execution now will be system led. So, price time priority, automated matching, and standardized settlement mean. So these control shifts from negotiations to system logic. And then your financial planning, that becomes a central part of this entire system. So your liquidity management is no longer optional. If you do not have any available funds, your participation itself is not possible. So you have to make sure that you have ample amount of funds available. The amount that is required for you to purchase or procure the credits should be readily available with you. And there are real transactional risks also, because especially around credit expiry, where buyers may not have control over the validity, because earlier you used to know like what is the validity of the EPR credits, but now that will not be there. So there are some credit expiry things also involved. And there will be cross functional alignment, which will become very essential. So your compliance team, your finance team, your operations teams, all of these teams now will have to come together and work in sync. Now this cannot be handled in silos anymore, wherein one team used to work separately and do the entire EPR compliance. Now all of the teams will have to come together. With this said, at the same time, we also have some critical open questions that the industry is still awaiting clarity on. For example, the exact go live date of the EPR ETB. We are still not very clear on that. And the final ruling on floor and cap pricing, especially considering the ongoing court cases, which Sujan has already discussed in the initial slides, and the HSN code classification. So whether your EPR certificates will be treated as goods or services, like Sujan said. Now, next is the OTP delivery mechanism, which registered number will be used, and the TDS applicability and compliance mechanism on the transactions. And finally, the trading hours and the order validity rules on the exchange. All right. So all of these are still unanswered, unresolved questions that we are still awaiting CPCB to reply us on, or like give some clarity to the entire industry, because all of these are very critical points. No, so while the framework is becoming clearer, execution clarity is still evolving, is still in an evolving stage, and that's why exactly discussions like these, they become very important for all of us. So I hope this session was very helpful for all of you. And in case you still think there are some things, or I'm sure there are a lot of things which are still not clear to people, or is little difficult for every one of you to understand, please feel free to reach out to us team. We will be happy to connect with you one on one and help you create your entire process, or help you prepare for the EPR ETP. I will be wrapping up this session. Thank you, everyone.